Hi, let's have a look at Cardano, ticker symbol ADA. We are very close to hitting the $3 mark at Cardano, and people are talking about, are we going to hit $10, $50, $100? What's the maximum we can reach in Cardano? And so what we're going to do here is we will look at the charts, we will look at the data, at relative valuation of Cardano, not just to US dollars, but also to Ethereum, to Bitcoin. Now, the first thing that I think is noteworthy is the market cap of Cardano. Cardano currently has a market cap of 91 billion, and thus 4.3% of all of crypto is currently in Cardano. So that's the market dominance over here. And when I hear price targets of like $50, $100 for Cardano, I've got my strong doubts. Look at relative valuations and relative market caps. Cardano is currently at number 3, and Bitcoin's market cap is at 900 billion. Ethereum's market cap is at 390 billion. So let's say Cardano would only go to $10. In that case, ADA would already be at a similar size of Ethereum. And the question is really, is that justified? The technology might be slightly more advanced for Cardano. You don't have the issue with expensive gas fees. You can transact way faster, way cheaper. But on the other hand, Ethereum is working in that direction as well, right? Proof of stake will be implemented in Ethereum, and Ethereum has quite a few advantages as well, right? It already has the ecosystem. It has the decentralized apps. It has NFTs built on top of it. It has all the developers that know Solidity, the Ethereum language, to type out quick contract. It's likely, since Cardano is so big, that this will also happen for Cardano. There will be a large ecosystem, but we are not there yet, right? Smart contracts will launch, but relatively speaking, in terms of maturity, Cardano should be at a lower valuation than Ethereum. Cardano is behind. And intentionally so, obviously. The project rather took like a slow and steady approach rather than the quick and dirty one of Ethereum, so it was slower. But still, if Cardano was to go to say $100, we would be looking at a market cap of 3.2 trillion, and that doesn't include the inflation that we get in Cardano as well. So it will be more than 3.2 trillion. Bitcoin is not even at a single trillion. So unless Bitcoin shoots up to like 300-400k at the same time, I don't see any scenario where Cardano could 30x from here. The risk versus reward right now for Cardano is very different to say 1 year ago. Now, that being said, let's go to the charts. This is the Cardano to US dollar chart, and we are close to $3. We haven't reached it yet, even intraday we haven't reached it yet, but there you go. Since the 20th of July, where all altcoins started to pump, we saw an increase for Cardano of around 171%. That's the rally over here. And so this obviously outperformed Ethereum. Ethereum at the same time gained less than 100%. We're looking at 85-86%. And so if we look now at the ADA price divided by the Ethereum price, or in other words, Cardano valued in Ethereum, you get this chart over here. So Cardano outperformed Ethereum by 86-87% in this recent bull run. Now let's zoom out a little and let's look at the long-term chart, and we can see in the past Cardano and Ethereum, they were kind of like head to head, moving in a trading range. And since the beginning of the year, where the altcoin rally started, right, Bitcoin dominance, it is falling since the beginning of the year from over 70% to currently 44%. So this is the altcoin rally. Before that rally, it was mainly Bitcoin that was gaining, but since the beginning of the year, a lot of money shifted from Bitcoin to the altcoins. So we got the altcoin rally, and Cardano definitely profited from this big time, an outperformance versus Ethereum of more than 300% since the beginning of the year. Now let's look at relative trading volumes. What we can see is that whenever Cardano outperforms Ethereum, it also tends to be traded more. So these seem to be news-driven pumps, right? Trading volume goes up, price goes up. We zoom in over here. We can see this pattern even on the exact day, right? High trading volume here, price went up. 13th of May, same over here. Trading volume was high, price went up by 27%. And here on the 19th of May, we also had some kind of appreciation and a comparatively high price. Now, when we look at the recent pump, it's interesting that the trading volumes, they are not as high comparatively speaking, right? Before, when we gained against Ethereum, trading volumes against Ethereum were also pretty high, but not so much recently. They are elevated, but not massively. And that's in general a good thing. You want that not too many coins move at elevated levels, because then that's an indication that the asset is moving from the long-term holders that bought over here maybe to the short-term holders that just try to jump on this rally. But when the trading volume isn't that elevated, you have potentially a more stable price increase. Now, that being said, we are obviously very high historically speaking, right? Cardano has never been that expensive versus Ethereum. We only had this little short blip here in like February of this year. But you can see, if you time this the wrong way, you can easily underperform versus Ethereum by like 50%. And this is what happened multiple times. Now, would that mean that I would sell Cardano right now? Not necessarily. But on the other hand, if you're DCAing into the market right now, Ethereum does look cheaper, right? If you just look at this chart the exact other way around, the Ethereum price divided by the Cardano price, now you have the relative valuation, how expensive Ethereum is. Now this looks quite enticing, right? This is the exact same chart as the other one, it's just flipped around. So relatively speaking, we are expensive in Cardano, and you simply have to think about risk versus reward. Are you okay to get in right now into Cardano to maybe make another 20, 30, 40%? Or do you rather want to shift a little, go into the assets that seem to be relatively cheap, probably still be invested into crypto because the overall bullish trend is likely to continue? So crypto assets, they are highly correlated. If the overall market goes up, all prices tend to go up. If you look, for example, at the correlation between Ethereum and Cardano, we are looking at 0.77. So that's a pretty high correlation coefficient. These are return correlations based on daily data, so daily returns. And so I've got a very high likelihood, if the dollar price of Ethereum goes up, that the Cardano price is going up as well, and vice versa. So the correlation coefficient, it ranges from -1 to +1. So having 0.77 as a correlation coefficient means the assets tend to move in the same direction on the same day. And so when you have both Ethereum and Cardano in your portfolio, you're not really diversifying, right? The assets tend to move in the same direction. And so another way to illustrate this, if green was Cardano and red is Ethereum, you do see that the assets, they tend to move relatively similarly. And so when you then construct a portfolio out of both of those assets, you do see that your portfolio in the end tends to move more or less the same. So it doesn't really make that much of a difference over the long term if you only own Ethereum, if you only own Cardano, or if you own a portfolio out of both of those. If you, however, have two assets that are not highly correlated, that might even move opposite to one another, say this would now be an asset with a low correlation coefficient. So that's, for example, Chiliz versus Ethereum, or Cardano versus Chiliz, right? Say you've got Cardano and Chiliz, or Cardano and Link in your portfolio, you've got way lower correlation coefficients. They are not negative, but they are relatively low. And so when you then combine those two in a portfolio, your overall portfolio line now looks much less volatile, right? You're basically canceling each other's price movements out to a certain degree. And so you get price appreciation over the long term without the volatility of each of those assets, right? You want to have lowly correlated assets, combine them in a portfolio, and then get a low price risk, low volatility portfolio that appreciates over time. And so since those correlation coefficients, they are high for Ethereum versus Cardano, I think it does make sense to trade back and forth between those two assets, to basically be heavily overweighted into one of those assets versus the other, maybe even just own one of those assets at a particular point in time, because combining the two doesn't give too much of a diversifying benefit. And so you might consider to flip between Ethereum and Cardano back and forth. And if that's your strategy, this would be the time to potentially make such a flip, to go outside of Cardano, at least partially, and pick up the cheap Ethereum. If you enjoyed this video, please give this a like. It will help the channel grow. And if you haven't yet, feel free to subscribe as well. I publish a video every single day. And since those videos, they are time sensitive, you might consider hitting the notifications. You don't want to get a price update 1 or 2 months after publishing the video, right? You want to get the video when it's fresh. Last but definitely not least, we've got a Telegram channel, the Bitcoin Strategy channel. You can join this by either simply typing within the Telegram app, Bitcoin Strategy channel, and you will find us. Or you can also click the link in the video description below. It will lead you straight to our chat. We are currently around 300 people over there. Would be great to see you there as well. See you next time. Bye-bye.